The RBA is actually predicting 30% growth in real estate markets across Australia. This is insane. We need to go and deep dive into it. Hey guys, my name's Ravi Sharma and I'm the founder and buyer's agent here at Search Property. Thank you so much for joining me on yet another episode of Search Property TV. If you're new here, smash that subscribe button, hit the bell icon so you know when I'm dropping these videos. Now, something really important here is that the Australian real estate market is moving very quickly. In reality, all asset classes are really moving quickly. So if you hit the bell icon, you'll know exactly when I drop this time-sensitive information. And of course, if you subscribe, the next video I put up on this channel is literally the best video that I think you will see this year, which is the best places to buy in 2021. Now, without further ado, let's see what the RBA is really saying here. Documents released from the Reserve Bank of Australia reveals that house prices could be pushed up by 30% if interest rates remain low for years. Wow, okay. Well, I've been saying that for the last 6 months on this channel that we are definitely seeing price increases. We are seeing asset price inflation. So it might not be just the real value of our assets going up. And a lot of people hating on this is usually come up and say, oh, but look at low wages and they haven't grown. Yeah, well, okay. That's the reality, but unfortunately that doesn't correlate with what's happening with asset prices. The real estate market does not care if your wages go up or down. That's fundamentally where we are at, and I understand how stupid that sounds, because how could you have no increase in wages, but you could have increase in property prices? That's just asset price inflation. People who have the property already, they're having this wealth effect with the equity going up in their properties, and they're taking that, leveraging it out and buying something more. There are people out here that are making so much money, so much wealth by literally buying properties and going out and buying more with that equity across into other ones. Now, I'm not saying that everyone's doing that, and nor do I advocate for that sort of thing. However, it's very important to realize these are the dynamics of the Australian real estate market. Now, as much as you and I may hate on that, that is the reality, and I'm here to talk about what's being said, dissect it and put my own spin on it. Hopefully you agree. If you don't, you're most welcome to share it in the comments, but let's continue. An internal RBA document released through a Freedom of Information request on Friday assessed the impact of low interest rates on asset prices. Low interest rates will lift asset prices, which in turn will increase wealth and household spending, the document outlines. House prices are also expected to rise alongside other asset prices, it stated, indicating that a permanent 1% drop in the cash rate would lead to a 30% rise in real estate prices after 3 years. So what they're saying here is because the interest rates are so low, that in turn means mortgage rates are low. That in turn will lead to increase in asset prices like housing and real estate. So what they're suggesting is 30% over the next 3 years. So that's 10% every year for the next 3 years. Let's continue. The national cash rate is currently at an all-time low of 0.1% following a series of cuts the RBA has made since mid-2019 in a bid to boost the economy. Now on this channel I've talked about how this actually happens, so definitely go revisit some of the older videos from the last 6 months. I've been saying the exact same thing and now it's playing out. Areas more likely to benefit from the low interest rates include local areas that have been constricted by housing supply issues, have higher mortgage debt rates and more property investors. That's interesting. I wonder why they're saying that. First-time buyer activity has also increased strongly in recent months due to low rates, RBA analysts indicate. High unemployment was described as the biggest risk to the economy, balance sheets and the medium-term financial and macro stability. But this will all be mitigated by low interest rates. Interesting. Wow. So literally what we are deciding as, I guess, a country, as the RBA is suggesting, is what I think the next 6 to 9 months will look like is let's just have lower interest rates because that will mean our existing debt becomes cheaper. Wait, does that mean what you've been saying on the channel, Ravi, is coming true? Yeah, that's exactly what I'm saying. I hate to say I told you so, but the real reality, I guess, around this is that it was always going to happen. That we're going to decrease the interest rates, and I've been saying it for 12 months on this channel. We've almost hit 1 year on this channel, but essentially, if you drop the interest rates, then your debt moving forward is actually cheaper. So let's say, for instance, I borrow $1 million and the debt was at 4%. Now, over time, I'm not able to pay it back. So what we do is we decrease the interest rates And now if we're sitting at 2% interest rates, well, my repayments are actually halved based on the 4% on the $1 million. Now it's 2% on the $1 million. So on that one, it's $40,000 compared to $20,000. Well, I'm going to be able to pay down my debt that was there previously because now it's cheaper. And that's effectively what's been happening. And that's why we see interest rates in Australia keep dropping. Yes, of course, they're going to say that by decreasing interest rates, we're going to increase the economic activity in the system because of the wealth effect. And the wealth effect is exactly what I've said, where people are house proud, where they see their houses go up in value and they say, wow, look at me, I'm rich now. I can do things. Maybe I should take out some equity and renovate the place. Or maybe I should take out some equity and maybe buy a new property or buy a fancy new car. That gets the economy moving. They can't do that if they do the opposite. If we now suddenly hike up interest rates, we're literally going to see people that can't afford their repayments, right? And so if they do that, they have to then sell. And now we have a negative turn in the economy. And that's why we've been seeing these decreases in interest rates. And 2-3 years ago, when they were doing the same thing, the Australian government and the RBA came out and said, look at, Australian government, look at the economy, it's amazing. Well, if it was amazing, why are we reducing our interest rates? It doesn't make any sense, does it? So when I came out and said, hey, maybe we see negative interest rates later this year in 2021, YouTube comments killed me. They were just like, this guy does not know what he's talking about. And now we're at 0.1%. You still think it's a reality? Let's continue. However, the paper also warned of the risks associated with low interest rates, such as if higher asset prices led borrowers to take on too much credit. A business outlook statement released today by Deloitte Access Economics' Chris Richardson also said a cautious RBA would keep interest rates and inflation low amid high levels of unemployment. The shift to very low interest rates for an extended period of time will help credit growth and hence help the banks, while it also generates some momentum for property services. Guys, yes, there's going to be people that benefit from low interest rates. They can make their mortgage repayments and they, start paying their debt down quicker. Amazing. It's definitely going to help some people. And I'm also, aware of the fact that some people really need that help. I get it. Totally get it. But what we're going to see this year is, and I've mentioned this in my top 10 predictions for this year, so definitely check that out. But effectively, if we have now lower interest rates and people are able to borrow more, and on the flip side, we also have APRA sort of pulling, away from these restrictions they put in for the banks to not be lending out money just like that, and responsible lending conditions are, scrapped. We then have increase in credit, which we've already seen last year, where more loans are being written out and more refinancing is happening, especially amongst the first home buyers, right? So if those guys are getting into debt, well, they're getting into debt that's cheap. So it's cheap debt, let's just get in. We've got the home buyer grants. So they all plug in and these first home buyers come in and they flood the market, right? Pushes prices up, inflation starts kicking in, and I guarantee you in 12 to 24 months, we're gonna start having conversations around how affordability is suddenly a concern when, realistically, less than 6 months ago, these guys were also leaking papers about how maybe these markets are going to fall and the banks are going to have to foreclose on houses. Honestly, the biggest thing I want you to take away from this is that you can't believe what is getting said. And so many people, I see some of you guys, link me to these articles or send me through some messages or even comment down below and you're like, oh my God, the market's collapsing. Look at what they've said in this article. I can guarantee you tomorrow, the article will say the exact opposite. They need to fund for themselves and they need to feed their families, right? So they got to get clickbaity articles in. But here, why you're here is realistically to go through this, put some logic into what they're saying. And I'm not saying that I know everything, but so far, everything I've been saying for the last 6 months regarding the Australian real estate market has been playing out. And why I'm saying the next part of this is important is because 2021 is going to be massive. It doesn't matter what you look at when you're looking at gold prices, the share market, you're looking at gold, you're looking at cryptocurrency, housing markets around the world are going up and they're reaching all-time highs. Now, it's a difference of really realizing which property is going to grow more than the other. Not all locations will grow. We will see a property boom across Australia, but some places will grow by 7 or 8%, some places will grow by 2%, some will drop. But then there's others that are going up by 13 to 15%. If you don't follow me on Instagram, I actually put up a story of some of the places we were looking at, and the growth that we've seen in the last 12 months will blow your mind. So definitely go follow me if you haven't already. There's daily updates on there. And of course, I've got a Facebook group, a private Facebook group where we do share so much more information, where I'm able to get more information out at a timely manner, more quickly to you guys. So definitely go check that out, but let's continue. Where are house prices now? Australia recorded a 3% increase of house price over the year 2020, recent CoreLogic data revealed. Aussie capital cities grew by a combined 2%, while regional areas shooting up by a stunning 6.9% over the last year. My clients that are watching are really happy people right now, I can tell you that much. So what do you guys think? 30% in 3 years sounds like a lot, right? But when you really look at markets like Australia and you look back at times like maybe post GFC and maybe around the time that first home buyer grants got introduced in about 2000, 2001, if you see the subsequent years after that, the amount of growth that we had in Australian real estate markets was really reflective of a property boom. Now, when I put out videos a couple of months ago saying that, look, the fundamentals are in place to have this property boom in amongst the whole COVID recession that was going on, a lot of people, gave me hate for it. But essentially, I'm here not just going, hey, you know what, let's all gear up because the property's gonna go up and property market's gonna be amazing. No. I'm not saying it's going to be amazing. I say it's going to be a rocky ride, especially if you're on the other side, which is that if you are trying to get into the market, it is extremely difficult. There are people that are going out there trying to purchase property, and I hear this from clients and emails that are coming through saying they went to the local sort of open house and they had 50 plus people go through the open house with 6 offers on day one. Now that is not normal market conditions. So when you're out there, it's really about being safe, and it's really about knowing what your budget is in place, because you don't want to be, I guess, paying a way above market value for a property, because that is when we see a bubble. Now, I'm all about the fact that low interest rates will have to stay. That's just fundamentally how the system will work and how it's going to efficiently work moving forward. Otherwise, we're going to see an entire collapse. They can't let interest rates go up. I think we are going to get into negative cash rate, but we won't see negative mortgage rates. Now, there are other things they can do, quantitative easing and things like that. So they are doing things in the background to make debt cheaper. But what we really need to remember here is that it's not me as buyer's agent saying, you should come with me, use my services and, buy property. We're extremely backed up. We have so many requests as clients wanting to come on board to become clients, I guess, and have utilize our services. So we're pushing out month and month and month after, because we can't have the capacity to cater for everyone. So I'm not here saying that. What I'm saying is get educated. I've got an online course, go check it out. It's in the link in the description. It's going to give you the mechanics of what you need to look for moving forward. We are in a time where suddenly wasting time trying to find out information from little pieces and putting them all together and then thinking I can run a 9-to-5 job and then live my lifestyle, it doesn't work. And we've seen that in 2020, the amount of people I have spoken to 6 months ago that are now coming back and saying, oh shit, can I come on board now? Unfortunately, it's not going to work like that. There are people taking action. And if you're unfortunately not one of those people, then you get left behind. That's the reality. I'm not here to sort of go, you should do things and you're going to be left behind. It's so negative. No, I'm spreading the positivity by saying, go do something, be accountable, and actually take advantage of the opportunity we have. Too many people sort of approach 2020 and 2021 going, oh no, look at us, we're wearing masks and it's sad. Okay. To be upset about the COVID outbreak and how people have been affected and families have been affected, totally empathize with that. I totally empathize with it, and I feel bad for you guys, right? The ones that have really had to suffer from that. Family members in my family have got COVID, right? So I don't take that lightly. But what I don't take lightly is people that are complaining they've got to go to Westfields and they've got to put a mask on. What are you complaining about? Life's pretty good. And, if that's all you've got to complain about, life is all right. Go home, research, do the education, because right now, building wealth has never been easier. If you know exactly what to look for and you have the right guidance, you can do this. You know, I'm not saying come to me as a buyer's agent, go to other people. If you find that you're vibing with their content and they seem to be speaking the truth, go with them. If you got a financial advisor, go to talk to them. You got a smart accountant or a mortgage broker, talk to them. I'm just saying, take the action, because the growth that you're going to see this year, yes, it's going to be sort of artificial with inflation kicking in, but it's still growth, right? And if you can take advantage of the markets moving forward versus your money sitting in the background in a bank account, I can tell you that inflation that you're finding in the property prices is killing the money that's in your account. So if you sit there and go, oh my God, yes, I've got $50,000, or yes, I've got $200,000, whoop-de-doo, because I can tell you now, that means shit all. It doesn't do anything for you if it just sits there, earning, 1% interest. If inflation is 3%, the money you make is 1%, you effectively mean you're losing 2% of your value every single year. Now, you want to invest in Bitcoin, you want to invest in shares, you want to invest in real estate, go and do something. This is more of a call out to know, look, we are now almost through month 1 of 2021. How much have you achieved? How many things have you knocked off from your checklist of goals that you set for yourself this year? It is really about action now, okay guys? I've got a link in the description for a course that I've got. I've got plenty of videos on this YouTube channel. I'm trying to help and educate. Some people think I'm a snake oil salesman or something. Like, if I was actually after that, I mean, there's plenty of other ways you can actually get clients, make a business worthwhile than spending hours and hours researching and then talking to you guys, creating these videos and then editing the videos. There are other ways to do it, I can tell you that much. But I'm here trying to get myself out there to put you guys in a position to actually be informed by someone who seems to know what they're talking about with some real logic. Stop watching ABC News, stop reading these articles and thinking, oh my God, dollar for dollar or word for word, this is what it means. It's not the case. So guys, I did go on a bit of a rant. I'm a bit passionate about these things. I really want you to go and smash goals this year. Email me if you need the help. I've got strategy calls. You can book them in the link in the description below. You can check out my videos. I've got it all here. It's now time to action. Go and be accountable, and I'll catch you guys in the next video. Thanks guys.